Hello everybody, my name is Dr. Christophe Fougere and welcome to Mastering Money. This is session number 2, the new view of money. Lecture number 8, Modern Monetary Theory and Endogenous Money, Part 2. What are the learning goals for this particular lecture? To examine 3 cases of possible abuses of the power of money creation and how can we stop this kind of behavior. So then let's just look at some example, actual or potential examples of abuses. Abuse number 1, fraudulent sales of homes or home flipping during a real estate bubble. So imagine you have the following situation. A banker lends $500,000 to one of his friends at a 10% rate. The friend buys property valued at $500,000 and resells it a year later for $600,000, now pocketing $100,000 profit, but because there's a 10% interest payment on the loan, that reduces the profit to $50,000, which they both share together. Now, this is an example of embezzlement of bank money, which is punishable by jail and prison time. So this is an illegal and criminal activity. If we push the argument further, we could actually say, well, what if the banker had actually created this type of virtual accounting money through a computer entry, like we've seen before? And that would really raise the stake of this kind of fraud out there. And we could ask, what are the mechanisms and the audit and control that prevent this from happening? We could also have asked, how does the friend know that they're going to be reselling the house a little bit later at a higher price? Well, here we're assuming that we are in a bubble, so that's that, and that the prices keep rising. And is this legal or not? Well, the answer is clearly that it's not legal and it's not ethical. Did these kinds of fraud occur before? Well, we have the example of the savings and loans crisis in the US in the 1980s, where there were dozens of banks and bankers that were convicted from having done this kind of fraudulent activity in cahoot with real estate developers. And do we know that this type of fraud has been perpetrated during the subprime crisis of 2007? Not necessarily. We don't have actual examples of that, but that is a potential misconduct. We could also investigate the cases of leveraged buyouts, which could actually pretty much function in the same way with creation of money out of nothing. So those are examples of potential frauds that could be happening. In conclusion, even though there's a vast majority of bankers that behave ethically and legally, there's still an incentive in the system for money creation for the goal of self-enrichment, and this really harks back to times when kings used to behave in the same way. Abuse number 2, Credit Suisse in 2008. In October 2008, following the subprime debacle, the bank Credit Suisse is on the verge of insolvency. It rejects the Swiss government's offer to help them recapitalize, and instead it wants to turn to Qatari investors. So it plans on selling 7 billion Swiss franc worth of equity to Qatari investors, and so far so good, until there is a surprise. In fact, Qatar did not transfer the capital for this purchase, and what they did is they offered Qatar to lend them the money, the 7 billion Swiss francs. How did they do that? The money was actually created out of thin air, ex nihilo. This is what happened. When they did the transaction, they did the double entry on the asset side, the loan Qatar on the amount of 7 billion Swiss franc, and on the liability side, they entered deposit 7 billion. And later on, they swapped the deposit into an equity. This is called a liability swap. And in the end, they found themselves with $7 billion of equity. And what's the lesson? The lesson is that the bank created really its own capital. Abuse number 3, the target system in Europe. The target system is a cross-nation clearinghouse for European banks. It is used to settle payments that occur between individuals or businesses who transact across borders and use different national banks. Each time there is a money transfer from one bank to another European bank, it transits through the target system. So I'm going to call this abuse of power, or this misuse of the system, as bad money chasing the good money. Imagine that you have an overly indebted country in which economic opportunities are restricted. Well, central banks and private banks can actually create money out of nothing and finance the purchase of goods and services and assets in other countries because the same euro is accepted in all European countries. This could have been the case. There is no actual proof of this having happened, but we're going to see some evidence in a minute. But this could have been the case for Greece, Italy, Iceland, Portugal, and Spain since the 2008 crisis. What's the evidence? The evidence is that the central bank of these countries are running deficits in terms of their target balance with the ECB. And the countries in which the money would be spent, like Germany, are running a surplus balance. So here are some data about monthly averages of target balances for national central banks in millions of euros. And we can see that countries like Spain, Italy are running about a 400 billion euro deficit, whereas France is running a little bit of a surplus, and Germany is running a really large surplus, about 800 billion euros. So can we say that there are limits to unruly money creation? If we listen to the modern monetary theory economists, they would say, well, naturally there is, because of the fact that the real economic activity will limit monetary creation. Other economists may say that the Basel Accords and prudential ratios that are regulated then will impose some constraints on at least European banks. We've seen the case of Credit Suisse in 2008. That was an exception. But this won't be very binding for American banks who are refusing to follow these European regulations. We could say, well, can we emphasize asset quality for collateral? But we're back to the Basel Accords in that dimension. We could view this as an instance of the prisoner's dilemma. If every major banks start doing this, then we have a money creation, and now you have an overview of the European Central Bank, and the monitoring of the European Central Bank would essentially slap the banking system on its fingers and say, you can't do that. It could also generate a high rate of inflation and loss of credibility in the euro. And then lastly, you have possibly the people's outrage constraint, where you have movements, popular movements like Occupy Wall Street or other movements that could potentially impose a limit on this kind of behavior, but there is no known mechanism that can prevent necessarily bank to go stealth in this kind of behavior and once in a while behave in this manner. Thank you for your attention.